Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Wait, where's my music? Oh my gosh, I thought I had it open here. I was all ready to go. Well, listen, I'm feeling a little bit. I worked out really hard yesterday. I'm feeling a little bit tired today. So let's go into look at the charts because man, I tell you what, this treasury market, it seems like a lot has been going on, and I have actually done pretty well in this market. But when you realize that we've just been stuck in this range, it's kind of like, oh. Now, we have had a little bit of downside action, and we pulled back, and now that we've been trading the past 10 minutes, they're starting to press again. So that's where we're at on the treasuries. S&P 500 still just kind of like sad. Actually, kind of some selling on the close yesterday. Oil getting hammered in the overnight session, down towards the lower end of its range. And kind of give you some perspective there. Gold and silver trying to pull themselves out of the doldrums. Maybe they'll do it. I mean, silver has had a little bit more of a recovery. So we got copper rolling over here. Like the futures contract has rolled over. Bit of volatility overnight, but I would say still favoring the downside. And Bitcoin had a bit of a drop yesterday, but it's recovering this morning. And you got the dollar looking a little bit weak this morning. And we're getting reports of Chinese banks dumping dollars for yuan in the overnight session, trying to protect the yuan. So that is a little curious, and as such, the dollar could be a mover today. Let's see here. I already missed the news, huh? We had core durable goods came in at spot 6 versus an expected 0, and a bunch of Canadian numbers. CPI month over month spot 4. So that's basically where we're at. For some reason, my camera is a little darker than I would like. That's okay. I'll have to oh, okay. Whoa, that is a 5K and a 4K at 04. Okay. So I think what I'm going to do here to my camera is change this back to 30. Maybe bring in there. I think that looks better. A little bit more vibrant. Okay, so today we do have HPI numbers and consumer confidence new home sales at 8 o'clock. So that's a decent mover. We got this Chinese stuff going on. I'm still concerned about flows to the downside. You can see that when they sell, it's like way more aggressive. I'm not sure if it was that that Canadian data. China, Canada. Sometimes I mix them up, guys. It's not my fault. That Trudeau guy is just, he very much acts like a Chinese, okay? But I don't know. It seems like maybe a bit too much movement for that. But I'm concerned that we might have a slow day anyways. Maybe I'm just leaning that way anyways because I'm feeling a little tired. Man, I worked out so hard and I was like, oh, I'm going to go to bed so early. And then I ended up going to bed at like the usual time. And I don't think it was enough recovery, man. I think I need more recovery than that because I can feel like my face is just like, bleh. I'm just gonna kind of peek around the internet here, see if there's any other kind of information that might help us today that I've missed. Oh dear. Futures rally fizzles after Lagarde dashes hopes of end to ECB rate hikes. That is, yeah, probably a significant factor in the market. Yeah, the ones at 04 and 04 half, those are massive, right? It's kind of a weird transaction to see come out so early too. I think it shows that there is some pretty strong selling here this morning, but I don't want to mess with a node like that, right? Like, that's very likely to constrain activity for some time. So I think that gives us some time to kind of look around. Canada 3-month moving core inflation falls to 3.72% from 3.83. Effort, no result. Well, I mean, somebody really wanted to sell some contracts there and they did. That doesn't... When you see like big orders, it doesn't necessarily mean that they want to move it. I think I've always kind of misinterpreted that. If somebody wants to move it, what they'll do is they'll be very, very slow at the first, and then they'll move it really quickly. And they'll try and do it after a move the other way. You know? That one could have just been that there was a big player out there that needed to sell treasuries that day for whatever reason. And he saw the liquidity there and thought it was a good time to just eat up that liquidity, you know? So if that is the case, that's why oftentimes you will see reversals off of those. I wouldn't say that it's like a good trade setup per se, but you know, if there's like a big seller out there and he just took two prices and is done, right? Then that's the selling's not there anymore. And that might mean that you might actually see more buying in the short term, right? Yeah, or he was long and decided to close his positions. It could be. If he was long and he was closing his positions, then that was kind of like somebody puking. Either way, though, in that scenario, that's still bullish, right? It's the scenario in which it's bearish is that him or other people still have plenty more to sell, right? And that he was desperate to sell so much there because he knew how much more there was to come, right? So that's why I would say it's not necessarily a good setup, but it is a good reason for us to be weary about wanting to get involved in the market. Because that's going to be something that just kind of becomes a huge magnet, right? Yeah, there was some quick moves. I'm sorry for starting so late, but I think that the first one was just the Canadian numbers, right? We had a big ton of Canadian numbers come out. I'm not 100% sure why it was considered a sell on treasuries. Durable goods was slightly higher than expected. Canadian CPI, trim and medium, pretty close to in line with the estimates. So I'm not sure what it was in that data set that caused the market to move the way it did. It is around, yeah. Was around the bottom of the hour was when all of that Canadian news came out. So I don't know what it was in that news that pushed them so hard. But there was definitely a strong like in terms of like the amount that it moved is maybe kind of like it's okay. But like look at the cumulative delta there in the 10-year, man. Like they sold a good 10, 20K, something like that in there. Right? And there was those massive market sell orders towards the bottom around the 0404 half area. So the market was definitely reacting to that news. I'm not sure why. Not sure what in it was the one that was like a there was in the futures trading subreddit best or worst futures streamers, and I got mentioned on the list of best streamers. So I'm happy about that because nobody ever mentions me on Reddit. The market usually, well, that's not true. Okay, so we haven't covered this one for a while, so let me get into it. The markets do not price in things. It tries, but ultimately it cannot. Why is that? Well, what it really comes down to is orders. So if somebody expects the numbers to come out at a certain level, they're going to take a trade before the news in the hopes that they correctly predict the number and then you'll have a move in a certain direction. But if enough people also make that prediction, they're already going to have their positions on. And so the flow then becomes at that point the selling from all those people trying to take profits, right? So that's not pricing in, right? That's the orders. So the real question is, what are the orders? And there are some situations where it's just impossible to price in something, that there are too many people that will have to make moves and decisions based on what that news was. So that's not pricing in, right? So as an example, I give you an example of a piece of news that they literally cannot price in, okay? If the Federal Reserve is going to buy a certain amount of assets, okay? Even if the market was expecting them to announce a buying operation of some sort, right? The market will still move. And why is that? Because it doesn't matter what price, doesn't matter what happens, doesn't matter what the markets price in, the Federal Reserve is still going to come in and buy, right? And so all you have to do is buy because you know that the Federal Reserve is going to, right? That's the easiest trade, okay? Now, when it comes to individual pieces of news, it can be a little bit more nuanced, but the question then becomes, right, or within that framework, then the question that is before us right now is, why did the orders sell? Why was there so much selling? I don't think that news was something that was really widely watched or anticipated, and none of the numbers that I see there really seem out of line, except for maybe the core durable goods. Is core durable goods being spot 6 versus an expected 0? Is that cause some selling in the treasury market? I'm not sure, but that's the best theory that I have, right? But that's the question that we gotta ask is, okay, so we saw in the treasury net 10,000 contracts. What was driving those orders? What was driving those orders? And I'm merely saying the typical approach to this sort of a thing is, well, we say this is what it was supposed to be and this is what it was, and then we adjust based off of. That's not exactly how it works, right? Because sometimes positioning and other things ends up mattering more. Something that I see a lot that I think really screws people up, because the typical retail trader position on this is that you can't make money from those events because it's already priced in, right? But what happens, the reason why they think that is they'll see news and they'll see like an initial pop on the news or whatever, and then they'll see the instrument move in a way that completely contradicts the news. And there have been so many times where I come in and I know things about repositioning and so on and so forth that really suggests that we're going to move down. And it's like they just wait. They wait for that piece of news to come up. They let the market trade that piece of news. And then when the liquidity comes back, then they start doing their selling. And so it was selling because, could be for some completely random reason, right? Like they need to rebalance their portfolio or something like that, right? But they sell nonetheless. And then everybody wants to attach that selling to something to do with the fundamentals when it had absolutely nothing to do with that news. They were just waiting for the news to be done first, right? So don't say that the market prices in news. The market tries to price in news, but prices are not very efficient. Prices are they are not an effective measure of all available information. They're just not, because of the strong impact that orders have. Live Action is selling Canadian dollars short. Okay. That one's going to be a weird trade. So the one thing that we do know that's unusual about today is that Chinese banks have been out there dumping dollars for yuan. So they've been trying to prop up the yuan overnight, and that tends to be something that continues through the US session and could be an important mover. And so if you're seeing dollar weakness, how does that affect a trade with the Canadian dollar? I don't know if it does, but it's certainly still something to consider. So Alex didn't push back on me at all. I hope I didn't hurt his feelings by picking on him too much there. You triggered me, man. You triggered me. It's one of those things that we love to talk about. And we have been getting quite a few. Oh, he was listening. Okay, that's good. That's good. Well, we've been getting a lot of newer people over this summer. So actually, we've gotten so many new traders in 2023. Crying and listening. Now you did it, Seth. You made your viewers cry. Okay, the market profile video you're working on, is it a pro and con type of video, or I would say that it is like this is what people tend to think and what you're typically told about it, and this is the truth behind it from the evidence that we have. The evidence that we have doesn't suggest that volume profile, market profile, whatever you want to call it, is useless. It doesn't say that it's useless, but it does say that some of the primary, some of the primary underlying assumptions about auction theory are wrong, right? And really, it's for the same reason. It's the same thing that we were just talking about, right? Like any time that you come in and you try and assign current market movements and behavior to some sort of measure of fundamental value of sorts, you're treading on shaky ground because the market is just not informationally efficient, right? But when you look at it, the stuff that you already know, that I've already taught you in the order flow course and the stylized behaviors of markets of order flow, right? You could probably see how some of the patterns or moves that they describe in auction theory are probably, some are I guess you could say phantoms of the stylized behaviors of order flow, right? So that's what that video is about. You've been in here where I basically gave you like the whole rundown of the video, right? The one thing that I'm doing though is in the video I did a back test for a volume profile setup, and I was only able to back test about a year of it, maybe 2 years, I can't recall. And I should be able to, with the data that I have now, I should be able to do 10 years. I could go. I have like the script written, and I ran down the script on a stream once. We could maybe do it again. I don't know if now is the best time because the market is still moving around a little bit. See, so normally I would be expecting them to come in and sell again today, but I don't know. So something I picked up on yesterday, by the way, the quarterly rebalance that happens at the end of this month is an extremely strong imbalance. That is to say, the amount that equities outperformed bonds is pretty excessive, and so they are going to be, it's like the 19th highest on record or something like that. So you're going to see some selling equities and buying bonds towards the end of the month. It might be a little bit too early for that. I don't know. So definitely on the 30th, I think you'll probably see, going into the close on the S&P 500, you're probably going to see some strong selling, right? But it doesn't just happen on that day. You kind of start to see it several days before. Is the Tuesday too early? I'm not sure. We do have Powell speaking on Wednesday, so that makes me wonder if maybe they would wait for that. So the bottom line is volume profile isn't bad, it's just used wrong. Yeah, many people use it wrong, or rather, their assumptions, their underlying theories and assumptions are going to lead to incorrect conclusions, right? Because they think that, oh, if it sits here for a long time, that's an indication of value, and so that must mean that is a proper value based on all available information. And then if we see it move up and there wasn't a change, then what's with that, and so on and so forth. Why was there a change in perceived value? And what we know is that it doesn't work like that. That it's just the orders. It's just a reflection of the orders. So the price that we have right now is not necessarily a reflection of fundamental value. It's just where price ended up at after the people put their orders in. So when you work from that framework, you're no longer sitting there trying to be like, well, this price is too high and this price is too low based on these previous. No, you only care about, are there going to be orders? Are there orders out there in the future that I can predict with high certainty, right? And if those orders are mostly buy or it's going to cause aggressive buying rather, then I want to go long and vice versa short, right? Thick books like rates creates a good looking volume profile. Yum. Well, and the whole thing behind the volume profile is that you do get like a normal distribution. Like you can see right now, it's a pretty good distribution around 04. And you see that pretty much always. And that's not what you would expect if the market was purely a random walk. So there's something there that says this isn't just random, right? But the question is, what is that thing? And what we know is that that's liquidity holes, right? If they're not interested in trading or there's low latent liquidity, that can get price stuck. And so you end up seeing a large amount of volume trading in one area simply because it stays there for so long that you end up having more volume traded there than anywhere else, right? I get mixed info on that. One prop firm said they hate the volume point of control. It's too dangerous. And another prop firm said, if you buy too far from the volume point of control, you can be unfunded. Really? Well, I guess the thing is that these nodes can kind of create gravity of sorts. But the thing that, again, that we can add to that is that it's because of the liquidity hole. That is a condition that only exists for a limited amount of time, about 45 minutes usually for the treasuries. So if there's been like a large volume point of control the previous day, I don't pay attention to it even. I don't even care because it's not relevant anymore. If it's been longer than 45 minutes, it's not relevant anymore. But I do have a volume profile up there and I do watch it. I'm kind of trying to predict where the volume profile is happening, right? Like, remember we said, well, there was those two big transactions at 04, half 04. Those are going to be like magnets. You're really likely to see those prices end up becoming the session point of control. And what do you know? They have been. And they were not at the time of that transaction. It took actually for them to go all the way up and then come back here before they became the point of controls. The DOM looks a lot nicer on the treasuries on ES. It's like looking into the matrix. Yeah. Well, so the stylized behaviors of order flow and like predictive signals that we can suss out from the instrument become more strong the more liquidity there is. The more consistent behaviors that you can have like that. And that's why the treasury becomes such a great instrument to trade. ES doesn't have as much liquidity, but it's still a pretty liquid instrument. But it also is way more of a derivative than the treasuries. I mean, the treasury is still a derivative, right? There's still the cash market and we're reacting to the cash market to some extent and stuff. But the ES is very much a derivative because it's an index of multiple stocks. So all of those individual stocks are moving, and the way that those individual stocks are moving is not necessarily in line with what the futures traders are doing. It's not necessarily in line with what the options traders are doing, right? And so because of that, there's a lot of noise in the ES too. And that makes it a lot harder to read the order flow, right? Not that it can't be done, but it makes it a lot harder. ES is an advanced instrument. When you look at Citadel screens, there aren't any charts, just a bunch of numbers, no candles. Yeah, I have the tick multiplier running, so you notice that it's not 34377.25.5.7. It just goes to zeros. Yeah. So I use the tick multiplier. I wish that they would put some options in there to change the format of how that looks so that I didn't have to have the zeros at the end, but oh well. Because if I try and make the columns smaller, it's right aligned, so it will get rid of the 4-3 instead of the 0-0. Yeah, I hear in Discord there was I got mentioned in a Reddit thread and I was like, yay, because usually on Reddit I get ignored. But somebody was saying that the list was kind of odd, and I agreed, like the way that they presented it and everything was a little weird. I'm gonna refresh Zero Hedge here and see if they had any comments on the information we had here. Okay, amid a slew of manufacturing survey data from national PMI ISM to regional feds, it should be no surprise that analysts expected U.S. durable goods to drop 0.9% month over month in May. However, as is the way nowadays, durable goods orders preliminary print jumped a strong 1.7 month over month, with April upwardly revised to 1.2% month over month. That is the third straight month of month over month growth and has pushed the year over year growth in durable goods to 7.3%, the biggest since October 2022. Ex-transportation orders grew 0.6% month over month, smashing expectations of being unchanged. Additionally, the value of core capital goods orders, a proxy for investment in equipment that excludes aircraft and military hardware, increased 0.7% last month after a downwardly revised 0.6% gain in April. This is not the bad news that the Fed was hoping for to maintain its pause, and hence the selling. I heard yesterday that TT is market by price and that Rhythmic and CQG are market by orders. And MBOs will show where you're at in the queue, but TT has that feature. So, not exactly. So CQG and Rhythmic offer market by order data. But to get it on Rhythmic, it's like an extra $100 a month or something. So you're ending up spending $130, $150 a month on data. And your platform has to support it, which not all platforms do. I kind of feel like I should be short here, but I don't know. I didn't really. So first of all, on this move down, there wasn't like a spot that really spoke to me as like, this is a good spot to go. I would just kind of have to chase it. And I don't really feel very good. Don't really feel very good. So I don't think I'll take a trade, but let's just watch it. It looks like it's selling. Now, to that point though, on the market by order stuff, somebody did a study where they passed order flow information to a machine learning algorithm, and they found that the algorithm performed better with market by order data. But that's like one study, and it was like very limited stuff. I don't know how much we can actually pull from that. So like, to the question for you as a retail trader, does market by order data add a whole lot to your trading? I'm not sure. I'm not sure if it adds enough that it's worth an extra $100 a month. So the thing is that like market by order data does tell you your exact position in the queue, but the estimates that you can get from market by price data is pretty good, right? But you're talking about a 5 to 10% difference in worst case scenarios. And I'm just saying, if like 5 to 10% is the difference between you going long or going short. It probably wasn't a good trade to begin with, right? I wake up at 5:30. Not 3 a.m. But I think I only got 6 hours of sleep last night. I just didn't get in bed early enough, didn't fall asleep early enough. And normally that's okay, but when you work out really, really hard, your body really needs that rest to recover, right? When you worked at the bank, was there anything super interesting? Well, it's all the stuff that I'm sharing with you, right? Then again, it's only one lot that moves price up in a tick, and that's a lot less than 5%. Well, so there can certainly be situations where, you know, the more that an area has been cleared, the more sensitive the market becomes to new orders to some respect, because it can only go, you know, because it's just so easy for them to clear those prices. But I don't know. I don't think for live action has been trading for a long time, so that's, I don't know for you. For most retail traders, I think that market by order data isn't worth it, you know? For live action, you've been trading so long without MBO that you're probably going to be fine without it. But if you're an algorithm, that's a different thing. Having that slightly more accurate estimate of where you are in the queue can tell you a lot about whether you should or shouldn't pull and stuff like that. So you love my Goldman stories? Man, I was just realizing yesterday when we were talking about it that, you know, because they were talking about cutting their workforce, and I was just so shocked that it was like they were firing 125 managing directors. Because yeah, my time there, I think I only knew like one managing director. So like my boss, he eventually became the head of technology in Salt Lake. And then he left, and he is the CTO at Wells Fargo now. I believe he's still there. His name is Mark Sherrick. He was kind of my manager for most of my time at Goldman. And but he wasn't a managing director at that time, right? So managing, now when you get over into the finance side, you get a lot more managing directors, because then you get guys that are actually like trading and managing books and stuff like that. But yeah, like managing directors are you know, big guys. Those are guys making the big bucks. For them to be cutting 125 of them is like so shocking to me. That's a lot. When you worked at the bank, were the employees actually trading, or more so taking calls for buying and selling, or more so watching for whatever they were assigned to do? Yeah, so Goldman, when I started, had a prop desk, and that because of regulatory changes, they took that one desk and spun it off into a hedge fund. And I don't know anything about what that hedge fund is named or how it's performed since then, but basically proprietary trading at the banks is practically non-existent now. And when I look back on the history of it, this is something that the majority, like if I were to get on Reddit and talk about this, the mobs at Reddit would come at me, right? They would disagree vehemently with me on this particular subject, but it really bothers me how this has gone. So they think, well, the banks, there might be systemically important, so they shouldn't be involved in any kind of speculation or trading of their own book. But my opinion is, number one, You need to have people that are doing that. You need to have people that are trying to predict the market and have that experience. That helps you on other areas. That helps you have better risk management and anticipate things and stuff like that, right? And that's where the real skill is built. That's the hard thing. And when you have people that are only just executing other people's orders, you don't get as good of so I don't think that the traders at the bank are as good as they maybe were 20 years ago. But then the other thing that really bothers me about it is that it really became a Trojan horse for the government to come in and just have like obscene control and insight into what the banks are doing. Maybe that's a good thing, maybe that's not. But like I remember when I left, there was this whole thing about how like there was going to be a government system where they basically had to report like every trade because they wanted to very aggressively enforce the Volcker rule, which basically means that the bank can't be trading for their own book. And the thing is that when you're taking, for instance, a block order, okay? So I'm taking the other side of a client's trade. The client will trade with me, and then I go and I take that amount and I go and sell it on the open market. And if the price that I can sell it for is higher than what I quoted to my client plus all of the other transaction costs and things like that, then I make money. And the market is going to move during that time. So it's possible for you to make money in that situation. It's like you sell it, but then the market moves up. And so you end up being able to sell it a lot higher than you were supposed to, and you make money. So is that proprietary trading? Not exactly. And the government wants to be able to go in and look at every instance like that and be able to say, okay, was that actually proprietary trading or not? And the thing is like the regulatory burden to do that, like the technology infrastructure that you need for that sort of a thing is obscene, okay? You realize we're talking about systems that are processing billions of orders a day, right? Like you have to use like highly distributed file systems and all sorts of other crazy stuff just to even look at that kind of data. And we're supposed to send it all to the government every day. It was crazy. And they were just talking about it when I left, and I was maybe going to do some work on that. And my understanding is that the banks like tried to implement that stuff and couldn't do it, and it continues to this day to be like perpetually moved back. Isn't that interesting? So anyways, the long and short of it is that they're not doing that kind of trading. The most serious kind of trading that exists at that place is market making and block trading, which is mostly about they're trying to help facilitate trading for other people. And they're not, what we're doing is a lot more like a hedge fund. Like my trading would kind of be considered like a block trading hedge fund, because what all these block trading hedge funds do is they try and anticipate block orders out in the market and try and front run them, right? And do you remember a couple of months ago, there was a news story that there was one hedge fund in particular that was like getting advanced warning of block orders from Morgan Stanley and was making a ton of money because somebody in Morgan Stanley was telling them that they were coming, right? But that's probably the closest professional analog to what we do. But it's kind of an interesting thing, and it's not necessarily good news for us in retail trading, right? The large institutions don't want to have to make those calls. That's probably where the potential to like have outsized gains, that's like the highest potential for outsized gains. But the professional institutions, they're not playing that game. That's too risky, right? They're just trying to facilitate the trading for all of the people that do make those calls. And even at that level, the majority of like the hedge fund activity is not even the same thing as what we're doing either. Because the majority of the hedge fund activity is like, well, we haven't discussed this before. So like you can have this situation where oh man, I hate it when G Inc like doesn't pop up. It never seems to pop up when I want it. I always have to go and like restart it. Seems like the desk traders don't really have decision making, more so just glorified phone answering. Well, I wouldn't call them phone answering. Is just they don't have to decide whether they're buying or selling, right? But there's still a lot of leeway in there about how you execute the order, right? Because like I said, if there's going to be a block trade, let's just say buying, because it's easier for people to conceptualize buying, right? So if somebody wants to come in and buy 30,000 contracts, am I going to tell them, oh, okay, I can buy 30,000 contracts at 0.4 No, because there's not enough orders there, right? So I'm going to quote them something higher. I'm gonna go use my models and say, if I go and buy 30,000 contracts based on my models, this is how much it's going to move it up. And so then I quote them that plus a little bit for me to make money and whatever. But I can't be too much because then I'm not competitive and they might go to somebody else, right? So then I can come in and I can tell them, oh, okay, I can sell you 30,000 contracts at like 0.7 or something like that. All right. Okay, so now I have 30,000 contracts. I have to buy them, right? So how do I do that? Well, I could come in and I could just start an algorithm that just kind of trickles them in throughout the day. Okay, takes too long. There's some risk in that, but what if price goes down? Like if I hold off and then price goes down, right? Like that works to my advantage, and then I can buy against that, and I'm happy, right? So they're still making decisions, right? They're not glorified phone answers. And the other side of that is that another thing is that a lot of that activity that goes on at those big banks is like over the counter stuff, right? So they are like talking to people over the phone, but you're talking about like really esoteric things and like really negotiating, and you know, then there's a lot of decisions that you have to make, right? I don't know if I would be good at that job. On the ES last week, someone was buying at market thousands of contracts during a quiet part of the day. It was extremely noticeable. Aren't they supposed to try and hide their positions? For sure they are supposed to try and hide their positions, but sometimes there are situations where they can get away with it, right? Sometimes you just know for whatever reason that the liquidity is there, and it's more important for you to execute it quickly because you can than it is to try and hide it and not let anybody else know. Sometimes it's to fool you. I don't know. Sometimes it's an algorithm doing it, right? If you had a choice for Jigsaw with Rhythmic, CQG feed, or TT, and all were free, if it was all free, it would be TT feed all the way. Okay, like TT is not free. That's the thing. Okay, like you're saying, would you rather have the feed that's $30 a month or $500 a month? Yeah, if it was free, I'd probably rather have a $500 a month feed. Or how it's, I don't know how much it is exactly. It's a lot. TT is not cheap, right? Actually, I think I messaged them the other day. Let's see here. Because this came up before, and I was like, I don't remember how much it was, so I asked them. Is there a trade setup with things like that? So for me, if I'm making a trade, I want to have some sort of piece of information predicting future orders in line with it, right? I really don't like making a trade based purely off of what I'm seeing in the market. Sometimes there are situations where I can just see that there's enough momentum and the situation and such as that I can just go along with the trend, even though I don't have a complete knowledge of what's going on. But I would very much prefer to come in here and be like, okay, they're going to sell today because of X reason, and then I start to see it and just go with it, right? Maybe it was on my other account. It would make sense that they would start eating sell liquidity, but the price didn't actually move and then it tanked. I think one of the things that like gets really weird with the S&P 500 is that there's so much more hedging over there. I know there's a lot of hedging in the treasuries too, but doesn't seem to work the same way. So like hedging meaning like if I own a large portfolio, right? I'm long a large stock portfolio, and then I'm concerned that we might have downside. Then I go short the futures to offset my long position, and that way I can hedge myself without having to bail on all of my equities, right? Well, there's a lot of that activity in the treasuries. And so like this situation where like I really like cumulative delta, which is market buys minus market sells, right? Okay. I want to trade when I'm seeing cumulative delta going like this. Consistent trend in cumulative delta. Price might be completely different, right? Price might be like this, but then like it eventually goes up, right? I kind of like that. But especially if they're both going, if they're both in line, price, cumulative delta, that's when I want to trade, right? But sometimes you'll get this situation where we're moving up and you're actually seeing cumulative delta fall. This is the divergence. Now, when you see this divergence, the kind of like the traditional market approach to this is that identifies a potential trade opportunity because there's an imbalance of some sort, and like one side will go, right? Either the price will come down or the cumulative delta will catch back up, right? Well, first of all, when they're not in line with each other, I don't want to trade because you don't know which one it's going to be. And so you don't really get a very good probability on whether to go long or short is the first thing. But anyways, the whole point of that is that kind of situation is quite rare in the treasuries and happens all the time in the S&P 500. And why is that? Because there's a lot more hedging activity and stuff like that. So I think the difficulty in ES is when you see flows like that, being able to identify what it is, like what could the trade, what kind of a hedge or whatever could actually be causing that flow. Sometimes it's really hard to sort out. And to be honest with you, I was never really able to do it in ES. So I would say, again, ES is a very advanced instrument. You know, it's a difficult instrument to trade from an informed perspective, right? Most of the retail traders that are trying to trade ES are doing noise trading. They're trying to find patterns in the price movement and take advantage of those, which is a little shaky. Most of those don't work. I wonder if this ZN long has legs. Well, they kind of shied away from 07 again. like last week and yesterday, I was pretty much like, yeah, there's some real selling coming into the market in treasuries and so on and so forth. Now that we're coming into the end of the month, I'm concerned that there's going to be some buying flows, right? So the flows might be more mixed, if not like outright long. So oh man, I definitely talked to somebody. Oh, here it is. Oh no, that's not it. That was from a year ago when we were trying to look at what was it? We were trying to get broker tech data. That's so weird. I really thought that I know that I had a conversation with them, but it might have been through like one of those chat interface things. What about TT? Maybe they talked to me on the phone. All I remember is that it was not cheap. I think it was like $250 for the basic and $500 for the advanced one that had like auto spreader and stuff. Like it was enough that you wouldn't see very many retail traders using it. You'd really only see professionals using it. And that's their market, right? Like their market is like commodities trading advisors and stuff like that. Interesting. So if we do extend here, I'm going to be keeping a real close eye on that 3.7, right? But we're still kind of like in a range, and I'm comes quite skeptical that we're going to break out of that range anytime soon. Let's just check Zero Hedge, see if they had any more. They have an article about the guy that got that Patriot Front guy that got unmasked. U.S. home prices surged in April. All 20 cities see gains as rates dipped. Oh, I totally forgot about that piece of news. When was that? That was at the top of the hour. That was at 7 o'clock. Which we did see some volatility around. And afterwards we moved down, and then since then we've moved up. It's a little quirky. Yeah, so when you trial the trading technologies interface, like, you'll notice that the way that the level 2s tend to change and shift is different. Like, you can kind of see, so if we tick up, for instance, right? With my Jigsaw and the way that I have things set up and what my data feed will provide me with and so forth, you'll see it all of a sudden, 1,000 contracts or whatever will pull here. Oh, they haven't pulled. There is a stack at 07. That's interesting. Interesting that didn't ping my thing, though. They didn't put it on all at once. Oh, okay, and they ate through 08 quite easily. Well, anyways. So we ate through 2142, for instance, right? When you see it on Trading Technologies, you can kind of see it change. Like, you can kind of see that it wasn't just one transaction, that it was actually like 100 transactions that happened really fast and stuff like that. Their DOM is not as customizable, though. Now, if you run Jigsaw with the Trading Technologies data feed, then that's really the best. But Trading Technologies and IQ feed, I think it is, are like the best feeds. And there is a noticeable difference in quality between them. Okay, so I was looking at it at like what, 3715? So there's 10. That wasn't a trade that I was really looking to make, just like the last time that I kind of noted where it was, so. Yeah, you can. Let me see if I can show you. Might have to come out to here real quick. I have so many old ones that probably should be deleted. Delete. Delete. Like, I still have my IQ feed demo. IQ feed you can demo for 2 weeks too. It's worth taking a look. Although IQ feed, kind of like the application that they have, like kind of takes control of your processor, and so it can have negative impacts on like everything else. I forget which one it is. So when you come in here to the connection manager in Jigsaw, see there's TT REST API, but I don't think that's actually the one. And Stellar, that one is a that one is a cryptocurrency thing, right? Still, I'm pretty sure that it works with TT. There's some good extension, like they're coming back to that 3.7 so quickly. They are starting to trade a little bit more here in the 09 half, 10 half area. I'm going to come in and look at the documentation real quick. NinjaTrader sent you a trial link the other day? It's time for a new Jigsaw version. I don't know. I think that they've got like some significant features coming, but they're still a ways off from releasing. In your opinion, what's the best way that a retail trader should trade ES? Well, so I still think that the best opportunity for you as a retail trader involves informed trading, which means you don't want to take a trade unless you know something that the larger market hasn't been able to really trade, and you know that they're going to be trading it very soon. So there can be situations, for instance, where a piece of macro news comes out that is likely to move the market like literally all day, right? Now, I think that there are more opportunities to do that in the treasuries than there is in the S&P 500. But when you find those opportunities in the S&P 500, you can make so much money off of them. It's really insane, right? So that just means you have to be maybe even more of a sniper in ES than you do on the treasuries. Okay, so I thought that little extension was a pretty good one, and that they would maybe slow down there for a second, but they didn't. They just went right up and grabbed the next level. So again, when I was like kind of pausing, I was like, okay, let's see what's going to go on here now. It's already moved 2 basis points. That is quite extreme. Again, there could be some end of month flows involved here. S&P 500 is buying. I haven't heard anything on my news squawk. Maybe let me just refresh my news squawk just to be sure. I mean, there could be some news out there, but I don't think that actually is. I think that's just passive flows. Cautious JP Morgan analyst cuts price targets on 9 major US banks. Oh, that's not helpful. Well, here was something from Nick Temeros. Our estimates suggest that the recent policy tightening is likely to have effects on investment, employment, and aggregate activity that are stronger than in most tightening episodes since the late 1970s. This affects our analysts' peak around 1 or 2 years after the shock. This is a new Fed paper. Finding number 1, firm investment and employment respond strongly to contractionary monetary policy when firms are in distress. Finding number 2, the distressed firm share is historically elevated at around 37%. Conclusion. Our estimates suggest that the recent policy tightening is likely to have effects on investment, employment, and aggregate activity that are stronger than in most tightening episodes since the late 1970s. You know, he said that about 15 minutes ago, and that the market could be reacting to Nick here. In all seriousness, by the way, why is he not showing up on this? Okay, that's weird. It's just out of order. I think that was Nick Timmeros. I'm gonna blame Nick Timmeros. Gonna take profits? Yeah, I think that's probably a good idea, because that was for something that doesn't have clear news. That was like super dramatic, right? Well, they did trade 11,000 at 12. That actually flipped around on its head quite hard. Yeah, that new study from the Fed, that seems really bearish for the markets overall. That really strongly supports the scenario that we move into a recession the second half of the year, and that it happens very quickly, right? Well, now given that, I don't think that I want to go short, right? Do I want to go long? No, I kind of feel like I missed the opportunity today. Man, if we had taken that from like the other side, that could have been a $50 trade almost. I really do think that that was from Nick Timmeros. I'd say that that was a little bit of an excessive move based on what he tweeted, but I still think it's realistic that Nick Timmeros's tweet drove that flow. I'm not entirely sure, but Belarus's Lukashenko confirms that Wagner founder Prigozhin is in Belarus. Do you ever use order flow charts? So I might pull up a footprint chart if there was a really bizarre move overnight and I'm really having a hard time trying to figure out what the orders were doing at that time, and then I could go back and look at it. But generally speaking, I only just put cumulative delta out there. So speaking of which, on that move, kind of interesting here. The ZB bought pretty strongly here, but it was not as clear of a move in ZN. Like only a 5k net difference in ZN, and there wasn't anything at all in the CF. Now, I would expect that with that going on in the flows, that would say to me a flattener, I guess, right? Flattener, because they're buying this more than this. So that should mean like this. But like, look, well, I guess they did flatten a little bit, but not a whole lot. So that's a little odd to me. Belarus, that's comforting where Putin just moved his tactical needs. Yeah, so the conspiracy theory is that the whole drama with Prigozhin and so forth was in order to get the elite troops in Belarus without anybody thinking too much of it. I don't think that theory really pans out when you look at the everything that's happened, because they destroyed some real hardware and the guys in Russia really were concerned. So the whole thing is apparently okay. So here's another thing. Oh my gosh, there's so much on this freaking story. It almost makes my head hurt thinking about it. Marco Rubio is on the Senate Armed Forces Committee, and he will tweet things, and he will tweet it like very matter-of-factly, like this is what happened. Okay, so what he tweeted yesterday was that the reason they stopped was because the family members of soldiers were being threatened. So the whole thing was moved to Belarus with their families. Seems to fit. Seems to fit. One has to wonder, though, how much Lukashenko is really in Putin's corner now. Because he may have kind of started to be like, yeah, Putin's a little crazy here. Putin's not making the best decisions here. And hence why he was willing to, and that would play into him being willing to help Prigozhin. But long story short, I'm quite skeptical of the conspiracy theory that there's going to be an attack on Kiev from Belarus. But we'll see. It's possible, I guess. By the way, the dollar has been getting creamed during this move. Like, ever since the treasury started moving up, the dollar has been slowly falling. Yeah, 6J moved with it too. So we might be able to chalk this up to a currency move again. I mean, that's kind of what I think it was the last few times, but like there was a lot of volume that came out in here and everything, but the actual change in cumulative delta wasn't that extreme. So what the heck is this? Oh my gosh. Okay. I just watched a video retweeted by Andrew Tate. Listen, I'm not like a fan of Andrew Tate, but he's like a top personality that posts stuff interesting to the national conversation, so I follow him. Okay. The video that he just tweeted was basically a guy was in court and he had been in prison for like 5 years for failing to pay child support. And they did a paternity test and he was not the father of the child. And the judge asked the mother if she knew that, and she said that she did. So this woman literally let a man rot in jail for 5 years, knowing that it was all BS. That is just absolutely, that is just crazy. Wow. Alan Dershowitz. Was there an attempted coup against Putin? Okay, I'm not sure why I would ask Alan Dershowitz about that, but okay. You know what I really hate? And I really try to avoid doing this myself. I find it difficult. Well, first I should explain what the thing is that I hate. I really hate that when people become rich and successful and they become a public media personality, that all of a sudden they think that they can speak with authority on everything. If Alan Dershowitz says something about constitutional or Supreme Court law, I'm interested in what he has to say. Anything else? He's not an expert in foreign policy. He's not an expert in Ukraine. So why would I listen to what he says in Ukraine? Right? Now, for me, it's really difficult because such a wide swath of things can be potentially relevant to trading. And so we have to be like just experts in the news and in everything. So like, I don't necessarily consider myself an expert in Ukraine and Russia, right? But I am an expert in following the news and what's going on in the news cycle and finding authoritative sources. And so I'm able to kind of make my own conclusions based on those authoritative sources and then show you what I've learned. That's a little bit different. But, you know, at what point do I myself cross that line and start commenting on things that I'm really not an expert in? You know? That's something that I think about a lot because I think it's kind of a hard line to play. But there are some people that at the very top that they really just like, they have like a very narrow range of experience and they love to talk about things that are not within that area of expertise. Meanwhile, Bill Ackman making threads about everything, right? I mean, I understand what's going on in their head, you know? Like, I feel like I've done pretty well in life. I have not dealt with a lot of the problems that many people in my generation have dealt with. I was able to avoid those problems, and I think that it's largely a factor of how I planned my life and how I live my life. And so when those things come up, I do want to talk about it, right? Because I feel like, hey, I have information that would be very valuable to you, even though they might not listen, right? But when somebody becomes rich, they think that applies to everything. They think that every opinion of theirs is like golden. And I really don't think it works like that. I think that a lot of people, you know, that if you become a really rich, right? A lot of the time it's because you got lucky, and it's a lot of the time it's because you knew some really niche things. You know, like if you're a billionaire hedge fund manager, then you know a lot about hedge fund strategies. That doesn't necessarily mean that you're an expert in foreign policy. It's not necessarily mean that you're an expert in ethics and sustainable growth. And, you know, like this, like the BlackRock thing. You see this story the other day that Larry Fink from BlackRock no longer wants to use the diversity, equity, and inclusion acronym because he says that it's been distorted too much by media and conservatives and things like that. Not saying that he wants to change his policy or anything like that, but I'm just saying I don't think that you, Larry, are enough of an expert on what is actually like moral and responsible investing to be making those kinds of decisions for like practically the whole country, right? I really don't think that an index fund should be making those kinds of calls. I think that if you're an individual investor, then you can you can vote the way that you want and whatever. Not necessarily because you're right, but because that's what, you know, having the money and being able to put the money where your mouth is all about. And so we want people to do that, right? And hopefully, and you know, eventually, if you're wrong about those things, then you'll lose money and the capital will go elsewhere, right? But then they want to make those decisions for everybody on things that, again, not sure you're really an expert in, right? Or like even better example, I don't think that politicians are experts on what is effective and sustainable growth. They should be, but they're not. And I see over and over again politicians throwing money and policy initiatives into things that, from the research that I've done, are not sustainable at all. Like electric vehicles. Cobalt mining is just sickening. The conditions that the people that are mining cobalt live in, it is so exploitative. It's completely unethical to come in and build our economy, like make cobalt a linchpin of our economy. Like we need to have more ethical sourcing of cobalt, right? And then on top of that, we can't charge the electric vehicles. So this whole push towards electric vehicles does not actually help the environment from what I've seen. I'm not an expert on that subject, so I don't like to talk about it a lot, but you know, I'm seeing a lot of policies being made about things that don't quite fit, and it seems to me like somebody just kind of, you know, they bought into something that they were told and ran with it when they really don't have enough to really know that it's going to be an effective thing. Yeah, there you go. You're poor. You don't know what's good for you. Well, I wouldn't consider myself poor. I'm not in the 1%. I'm not a millionaire, but I'm doing pretty good. Do you think that 09? Yeah, so sorry, D. I saw that earlier, but do you think 09 is a good spot to go long based on your intel? So I think that based on what we know about order flow and the way that trade played out, I think that you have to be cautious about this retracing all the way back to 04, which is to say that the liquidity through that entire area could be suspect. That doesn't mean that it's going to get to 04 or that I would buy it at 04 there. Just that we know that the liquidity has probably been disrupted through that entire area because of that quick trend. And because that quick trend reversed so quickly. ZN continues to be net sell as well. I don't think that I'm going to end up taking a trade, but I'm kind of seeing some contradictory things here in the treasuries. I had a friend who owned a headhunting company, and I asked him, isn't he intimidated a little when dealing with Fortune 500 CEOs? And he answered, no, they know what they know, and I know about golf. By the way, he stunk at golf. It's funny. I'm not very good at golf. I would like to... Well, you know what? I've never been in a situation where, like, there was lots of opportunities for me to golf. And I keep thinking, you know, maybe someday I will be in those positions, though, and I really need to get on top of that. But I never have, and I'm kind of thinking that maybe I should just not care. Before you don't know what's good for you. Like, one of the things that I think is really weird is that our perceptions of, like, what is well-to-do and what is not is, like, really distorted. Like, because we think of a Fortune 500 CEO as like these guys that are making hundreds of millions, if not billions of dollars a year and stuff like that. But a lot of CEOs are more in the 100, 200,000 range. Like there are many CEOs that don't actually make that much salary. In fact, most CEOs of companies, if we were to like look at the Russell, most of them are not making millions of dollars a year. Right? It's such a weird thing about the Pareto distribution, right? Which is to say that like you have this distribution like this, and like this point is like half of this point, and then this point is like half of this point, and so on and so forth, right? And so you'll get one person that's like way out there that, because it's like exponential, he has more money than like all of these other people combined, right? And so then we look at this one person and we say he's representative of everything, right? I didn't draw this chart very well. It's a curve like this, right? And so this is actually the rich, right? There's actually a lot of them, but there's a lot more of them here than there are here. And these guys are like billionaires, and these guys are like millionaires. Like maybe their total net worth is like 1 or 2 million. Oh, we're getting news here, so let's pay attention here. Okay, so consumer confidence is 109.7. New home sales. Oh, this is all quite hawkish news. I think I already missed the opportunity. So remember I said, like, you got to be careful about, like, we could retrace all the way back to 04. Okay, so that happens. If I had been able to take the trade as the news came out at like 07 or 08, I think I definitely would have taken that. Because, okay, so consumer confidence was higher than expected at 109.7 versus 103.85. At Richmond Fed Composite Index was negative, but still better than expected at -7 versus -12. And U.S. new home sales change month over month was 12.2 versus an expected -1.2. So that's all strong growth, hawkish news. And we had an area of weak liquidity. 07 to 04 would have been easy, and then you could hold it to see if it goes further. Oh, whoops. Okay, so I'm not too happy with that initial test of the low. Although it still kind of looks like it could go. The 5-year definitely sold this. The 5-year made new lows quite easily. Yeah, that new home sales being 12.2, that's a big outlier, isn't it? Although we've known from the numbers that we got last week that housing did surprisingly well last month, right? Actually makes me wonder why the consensus estimate was -1.2. That doesn't make much sense. Well, this kind of all presents us with some pretty hairy trading here, because just as we had a suspect liquidity coming all the way down to 04, let's say to 03, okay? It's going to be the same thing all the way back up here. Like, they could retrace back to the 07. I think that news is enough that the selling could continue, though. Just know that the liquidity above us might be a little weak. There has been some pushback at the 02 half area as well. Okay, that's weird. They gave me a bad price. I put my limit order at 2734, but then I actually saw the order go off at 3731. So I don't know how that happened. Even though the liquidity above us could be a little suspect, the pressure seems to be still on. Okay, here they are, good stack down at the lows. Okay, there's a new low for the 10-year, at least a new regular session low. Is it a new regular session low? Yes, it is. Now, the low from, what was it, Friday? Let's not say Friday. But there's kind of an odd spot at 29.5. 29.5, and then the lows from like Thursday, Friday was 21. That seems like a far away, but it's actually not that crazy. This has been quite the interesting day, isn't it? Because it kind of reversed twice, right? Like, wait, we had the down movement, and then that got reversed. I really think it was the Nick Timmeros tweet. I don't know if I can prove it, because I didn't notice it as it happened, but I really do think that was the Nick Timmeros tweet. Okay. And then the new home sales and consumer confidence numbers flipped us around again. So there actually is some pushback, and they're just running right into icebergs. Okay, so there's, oh geez. I was gonna say there's a big order at 31, but like before I said it, it pulled. There was 4K there, and now there's 22. It seems to me, well, no, it is the 5-year is leading. The 5-year is leading here. And it is mostly a flattener. But I'm wondering if we might get to where the 30-year starts to drag us. Okay, so a little bit of absorption at 31.5 then. Well, which broker are you on, Live Action? Or which data feed are you on? You're afraid to say it in public? Why? I mean, if it was like I wasn't able to get out like as the news hit and like it dropped there, no matter which feed you're on, that might be hard, right? But I didn't seem to have any problems with Rhythmic, so. Because what you said sounds like a continuum problem to me, right? Probably shouldn't say that. That's basic baseless accusations. Baseless accusations. So do you see the 30-year lag in there now? As the 5-year retraces a little bit. What? Okay, Bitcoin is rising right now amid reports that Fidelity is going to, what is the word? Apply to have a spot ETF. Fidelity is applying to have a spot ETF. That's like the second large institution trying to get a spot ETF. but I still think that the situation is the same as when they denied the last spot ETF, and ergo, even if it's more reputable people proposing it, I think that they might still get denied. Isn't it striking, though, how all of the sudden there's been this huge institutional push to like monopolize the Bitcoin space after Bitcoin got like absolutely decimated from the whole Sam Bankman-Fried stuff and everything? That's been like almost a year. That's been over a year, hasn't it? In fact, I would almost say that Bitcoin has seen some good news recently, right? I dare say that Bitcoin hasn't moved as far as I thought it might off that good news. Probably because the public still seems to be not very interested in it, but I guess we'll see. Well, it's still going, folks. So remember, 29.5 was what the level that I was looking at from Friday. It's like the 29.5 to 29. I'm interested to see what we get there, if anything. Marty, you're probably right. Because remember that there was some really bad news. Like, what was it bad? Oh, it was like the actions against Binance and stuff like that. And then there was action against Coinbase, and it was like when there was action against Coinbase, Bitcoin didn't move as much, and then actually it like reversed and ended up higher. And I'm like, that's awfully suspicious, right? And I have to think that probably, yeah, there was a lot of insiders at the time that knew that these other announcements of larger institutional players coming in and trying to make ETFs and stuff was probably coming. However, it's well, this is maybe good, this is maybe bad. It's still a risky trade, right? Because the regulatory cloud, let's call it, is still there. Like, even though it's like Fidelity requesting a spot ETF, I think that the SEC is probably likely to shut it to shoot it down still. You know? I could be wrong. Like Bitcoin itself is probably okay, because Bitcoin doesn't seem like it's a security. Some of these other ones were definitely securities, but not Bitcoin per se. Okay, well they went a little bit lower there, but not by too much. And kind of equalized back at the 31.5-ish spot. Can you believe that we were at 3.7 at one point? Like, interest rates have risen 5 basis points. When we were coming into that news, though, I was not thinking go short into the news for sure. So I'm still seeing a lot of overall level 2 activity, but on the inside it's pretty quiet. But there is a lot of liquidity being offered up on both sides there too at 30.5 and 31. There was a couple clues earlier. I don't know. I guess there was one clue in that yes, the ZN never really turned by. The cumulative delta in ZN never really turned by. When you look back at it, it seems like it really was like saying short the whole time. But that trend wouldn't have been clear until after the news, really. Because before the news, it was just like, that's just like reverting back. Just everything's clean here now. It wasn't, you know? Well, I see a lot of good benchmarks below us that if they're able to push further, you know, this could be a big move. There could be another 5 basis points in this, to be honest with you. But the order flows that I'm seeing at the moment kind of look like that the selling is kind of equalized for now. So I don't know if that means we wait another 30 minutes. I don't know. There's still icebergs out there, apparently. Let's reset above us. There's a lot of transactions going through there at 31.5. Did I not take this on my live account? Oh, what the hell? Huh. It did not. What's with that? That's kind of weird. Well, that kind of sucks. When I... Okay, that's weird. When I try and switch to my live account, it doesn't let me. Why would it do that? Does it do it on the other ones? So this whole time I thought I was in a live trade and I wasn't. detection mechanism active. Something's going on. Is it doing the same thing to you too? What is with that? That is weird. What could cause that? Could it think that I don't have a full license? Let me check a few things. Okay, so first of all, it definitely did not give me a live order. Oh, that sucks because that was $10. That was hard fought money and a good opportunity, and I think I would like to still be in it. I'm a little mad. So is Jigsaw having a problem like with the licensing server and it thinks I'm not licensed? Let me just check this. No, so it says my live trade license is good until 16th of next month. So it can't be that. Okay. Let's just try reloading Jigsaw. You had to stop? Oh, geez, man. Well, when something like that happens, it's probably best for me to not try and trade because I might try and revenge it. I might just like get a bad spot. That whole thing is a little suspect, man. That's so weird. That's never happened before. Not even close. Okay, I don't know why it was giving me that sound. Now I can put in live orders. The fetch. It's so funny. It's like I missed out on $20, but I'm a little bit miffed. Actually, it's not $20, it's $15 at the moment, but it's going for more. They're going without me. Oh, jeez. This sucks so bad. Because this could be like a $20, $30, $40 trade. Why do I think that there's so much potential for it to go? Oh, because I think that they're going to get through that 29 and then there's going to be more. Look at that. They're just slicing through it like it's butter. You guys sure we can't come back to 3.734 so that I can get in proper? There's my $20. Boom. Oh, that pisses me off. Well, I'm just gonna put on today so that I can remember it. I'm gonna say the title is Whoops, Wrong Account. Wrong account. They're still shying away from it at 29. Usually when they hit like the 29, you'll see like other orders go off and stuff, but you're adding to it in ZN? Wait, you're adding long in ZN? I'm concerned about how much more. I'm really concerned about how much more interest rates could rise here. To be honest with you, I'm not sure I can get on board with that trade. So, the ECB has been kind of saying interest rates need to go higher, and they've been kind of hawkish, right? And the Federal Reserve, they want to stay paused, but I don't think that the data is giving them, very much. The data is not going their way. And especially if the housing market is coming back up like 10% in a month just because of a pause, that kind of says that like we still have a long way to go in terms of being able to moderate demand. I would again point to the student loan issue. I think that there is a lot more money out there available in the hands of consumers than there otherwise should be because of the pause on student loan payments. Well, it is at a recognized level, but that doesn't tell us anything about if it's going to go stop or continue through here, right? It's just a benchmark. Like to me, if they cleared through 29, we're getting a pretty big move, right? But I think we can already say we're getting a pretty big move. Okay, so there was a 4K buy-side iceberg at 29.5. So that was the sort of thing that I was expecting to see around here. It doesn't mean that I think that it's long or short. I think though the trade that I wanted to be in was long 3.734. I might have taken profits on it already, but if I had been able to hold on to it this long, I think I would still be holding out in the hopes that they cleared the 29. Well, yeah, it could break lower in an extreme way, right? But there is so one thing, first note, the liquidity is thicker, right? There's like almost 3Ks on here, and below us there's definitely 3Ks, right? So there are large players active in the markets now because of this news, right? And when you get that sort of a thing, that tends to reinforce the trend, right? Housing in Canada. Well, Canada has so much bigger of a housing problem than the United States does. Yeah. It is kind of curious how precisely they stopped there at 29, but I'm always kind of in favor of those levels getting busted, you know? Well, what do I know? I think because I didn't get in my position and everything correctly, that I'm on the sidelines now. It sucks so bad. I'll get over it, but it's a little disappointing. What do you think today's closing interest rate will be? They are kind of hinting that they have kind of reached the extent of their impact. Like, a lot is traded at 29.5, right? But I do find it a little suspect where it did it. Another buy-side in iceberg at 29.5. Oh, geez. So there was like 3K at there at 30 and like 2 orders went off and they all canceled. 113 was the balance on one. Yeah, that's true. Well, like, yeah. So like if we're going to talk levels, right? So again, remember, I use levels as benchmarks. So I was looking at this one, right? And then to this. So if we were to cancel out what happened last Friday, was it? Yeah, Tuesday, Monday, Friday, Thursday, right? So if we were to cancel out what happened on Friday, then you could go as low as 21. But there was kind of this place where it settled at that is kind of seemingly acting as support for now. So does that mean that I buy it here? No, it's just a benchmark. Like this right in here is kind of like the ranging behavior. This would be like a strong trend. But when you kind of zoom out, you kind of say, oh, wow, like we've really been in a range anyways, right? But that's, I think, kind of why I'm interested in this trade, because we've been in a range here, right? But what I just saw suggests to me a relatively major shift. A relatively major shift that could lead to persistent selling. I want revenge. I just want to be. I'm even sitting here being like, well, I guess I could go long at 3.375. Delta and ZN is sleeping. Well, so there were, off of the initial move, we moved from like 96 to 81, so like 15K. That is a little bit less than I would expect given what we've seen. But then after that, and things kind of like settled out and we started to move lower, that went from 91 to 81. So that's like a 10K change too. So like, yeah, that was a very hawkish data point. In fact, to distract me from trying to FOMO trade here when I really am probably not in a good mental space to do it, because I'm just so miffed about my getting like the perfect spot and everything, and it finding out that because of a bug in the software I was not on my live account. Is that really upsets me. Okay, new home sales have been dramatically outperforming existing and pending home sales as unprecedentedly low inventories send buyers into the arms of incentivizing home builders. However, expectations were for a 1.2% month-over-month decline in May, and instead new home sales exploded to 12.2% month-over-month. That's the third straight month of month-over-month gains and sends new home sales up 20% year-over-year. New home sales completely decoupled from existing home sales and are now at their highest since February of 2022. There was the move lower, by the way. The median home price, $416,000, which was an increase from last month, but only after a huge downward revisions for the last 4 months. Housing activity has seen a resurgence this year as anticipated by a very simple leading indicator, the change in the level of mortgage rates. As Bloomberg's Simon White notes, while longer-term yields are still much higher than they were a few years ago, they have essentially gone nowhere in the last 9 months. Thus, the change in mortgage rates has been falling. That's been enough to give housing and other interest rate-sensitive sectors such as autos a boost, but that impulse will soon start to fade unless yields and mortgage rates start to fall. There we are. $30. Fuck. And I probably hold it still. Another reason I don't like my trade is because I just want a few ticks bounce off this level to scratch it. Yeah. See, I told you, it's just not. Yeah. So do you think that they're going to make it to 21 though? That's still a long ways away. Right. Because that would be the true retrace of this move on Friday. Now, if we were speaking from like a valuations perspective, like let's just assume for a second, this is all false. Everything that I'm about to tell you is like false. It's not the way that a market works. But if we were just to assume that the market moved down here because of the Federal Reserve meeting and jobless claims and so forth, and then they moved up here because of whatever news we got on Friday, right? And then we said, oh, okay, this news changes everything. So then we are going to have higher interest rates. We should bust out the bottom of this, right? Now, that's not actually the way that the market works. The way that the market works is orders move markets. Right now in ZN, I'm not seeing that many orders. We are seeing them in the 5-year, right? We are seeing them in the 5-year. It's really interesting to see this like down and flattening kind of suggests that like they expect interest rates to go higher in the short term, but in the end, eventually they think that it won't be there for very long, right? Versus when they move up and they're steepening, that's kind of like, oh man, flight to safety, the recession is maybe imminent sort of behavior, right? So we've kind of had both in the last week, and I would say that in the current context that the interest rate market believes that there will be a recession and that the Federal Reserve will have to reduce rates quickly. Which is what I think too. I think that there's going to be a recession and that they'll have to reduce rates. However, I would warn that they won't be able to reduce rates very much. That this kind of environment that is kind of creating an inflationary environment might be around for much longer than people anticipate. But I would have had a $35 trade if it wasn't for that platform issue. So what do? You hold it on? It might be one worth trying to hold on all day to. Although I would also say they built a pretty good distribution at 29.5. they might snap back up to that. The selling pressure is not giving up, but that's just kind of the lay of the land. Big order at 26. Shying away from it for now. I think I remember voters saying no rate cuts on the agenda this year. Well, so the FOMC members have kind of been giving mixed messages on that stuff lately, I think. I think the reality is that they're very uncertain for these next few interest rate cuts or meetings. I think that they're quite unsure for these next few meetings. But I don't think that you can see new home sales spike 10% in a month and that not affect, you know? When will my... Man, you really want me to make that video, man. I think that I'm going to be shooting for getting it out on the 10th. Like, I want to make it, record it this weekend, and then edit it the next weekend so that it can be out on the 10th. Oh, but I feel like these are things I've told you before. You know what's kind of weird to me is that the content that when I make the content and I'm like, this is like really game-changing content, like this is huge stuff, and the way that people react to it are like, oh, okay, like that was kind of an interesting video, you know. And then when I have a video where I feel like I'm mostly just like repurposing information that I've shared before, but maybe in a different way and stuff, and everybody's like, oh, this is like such a big deal, and you know, The volume profile video is going to be mostly information that I've shared with you guys before and just applying it to volume profile. Probably isn't going to change the way that D trades. I'm waiting for your technical analysis. Already made a video about technical analysis, right? I do really want to put out that smart money concepts video. So much so that I've thought many times maybe I'll put that one out before the volume profile one. Dude, that's a 4K. Is this going to be like another As She Goes? The thing that's funny about this trade, like I'm being stingy. Well, I don't know. Part of me is like, if I wanted to go long rates, I don't think I could do it at 3,765. But I think the real reason I'm doing this is because I did have a platform issue when I'm tilted. But so far it looks like it's beelining right to where I thought it was going to. Right? I feel like I make more good calls than I trade. Good calls, right? I don't know what's with that, but it was bound to happen. Like, I've been on a really lucky streak lately, so if the break of the lucky streak was I missed out on a big trade rather than I had a really big bad trade, then I'll take that one. I'll take that one any day. Good. I'm glad that LAFTA has taken advantage of it. I really kind of like, when I woke up this morning, I was like, you need to push it, Seth. But then I was like, no, now's not the time to push it. We need to give it a month or two, and then I could maybe start trying to push it a little bit. It was because of that thread, because they were saying, actually, I should come in and check this. They were saying, well, all of these people make more from the YouTube than they do from the trading. And it's like, well, I mean, I'm trading micros, so. But I think this month it might actually be close. I think this month it might actually be close. Journalytics. Oh, live action? Well, I was afraid that you were going to be down a big amount. So if you're at break even, that's, you know, count your blessings. Count your blessings. And let's see here, my dashboard. Only June. Only live trades. Oh, okay, so I made 52. Sometimes the stream will make $200 a month, so I guess if I sized up as much as I should, I probably would be up. Especially after it was probably a $50 trade here. If I had gotten that, then I would have made more from the trading this month than the YouTube. Oh, man. And then that would have been a good time to size up to 2 contracts, right? Or to 3 contracts, or whatever. It won't stop until the consumer feels the pain. You know what else? I wish that when I realized that it was a sim, that I didn't immediately close it. Because then I could still say, but look, I did take the trade. I did not have Jigsaw freeze. So earlier today, I thought I was on my live account. And like whenever I tried to switch to my live account, it would switch me back to my sim. So I thought that I was long one live contract at 3.734 and it was a sim. So I missed out on $30 so far. Okay, well, I tell you what. If they moved for another new low here before getting a pullback, that would be something else, wouldn't it? You had issues too. I kind of wonder if their licensing server was like having an issue and didn't think I was on a live trade license, and that's why it moved me off of a live. You know, that could be the case. They are overdue for an update, but I think they've been working on an update that has some more like big features in it, so it might be a while. Ninja Trader saved. So what happened to you, D, exactly? You had a trade that would have been bad and Ninja Trader prevented you from taking it? Oh, look at that. It is bouncing. I had a bad trade long call and I was on some. Okay. Well, there you go. There you go. Maybe the reason that the cumulative delta hasn't moved all that much today is because we all got our platform screwed up and ended up being on sim. Our trades weren't actually live trades, and that's what's causing this. I'm sorry. I apologize to the exchange and to all the other traders. But I'll do my best to make sure that this doesn't happen again. Time to make pancakes. Okay. Thanks for stopping by, Laugh, though. So, I'm seeing quite a heavy imbalance here. So let me try and explain this. I got to be careful. I got to be like really precise about how I say this because people could take it the wrong way. Okay. So what am I seeing? Well, so I like to use these price levels. This is kind of like a model to kind of suss out what average market maker positionings are. And these lines are like their average position. And these levels are like their maximum break-even point. So like below this point, there is no way that anybody that's been market making long today is in the green. Okay, has made a profit, right? All of their profits are gone at this point right here at 29. So it is difficult for price to stay excessively below that line for very long, right? Eventually it will tend to like come back to it and come down. Now that doesn't mean that I would like take the reversal on it coming back to that line or any of that stuff. I've back tested those setups and that doesn't work. Okay. But it does really strongly suggest that this is extremely oversold. Like there's likely to be some strong washback. And so you can see we already have like a 4 or 5 tick reversal here kind of in the works. So might we come back to 29? Maybe we'll see. I think that the liquidity is probably going to be quite strained through this area, right? So we absolutely could trade 29 again. I'm not suggesting a trade. I'm just noting a market condition. I'm not going to take a trade. I am going to shut the stream down, sulk about it a little bit, and then get back to work. No, I don't have to sulk about it because I didn't lose any money. I sure would have been happy to have seen the $30 winner, though. I'd really like to catch a $50 winner here one of these days again. It's been a while since we've caught a $50 winner. Just coming through. Keep going. Oh, we've been doing really well. So like I said, oh, I already closed it down. Hold on a second. Let me show you. Okay. Where's the little show stats button? Okay, so I took 8 trades this month. Net 8 trades, 6 winning trades, 2 losing trades. And I think that those 2 losing ones were at the beginning. Where's the little chart here? Yeah, those 2 losing trades were like on the first day of the month. Okay. So like I'm on a winning streak of like 6. 6 in a row. Now they were all relatively small. Like, look, my average MFE is 15. But it's not. So I got to put a big caveat on this. This is not typical performance, okay? This is not typical performance, but they have 1.5 to 1 MAE and a 75% win rate is nutso. There's no way that stays that high long term. But I did really well in June for whatever reason. And I was gone for a week too. Was gone for the 1 week that was like the biggest movement, right? Like the Federal Reserve and all that sort of stuff. Okay. But yeah, I've been on a really good lucky streak. Of course, it's only $50. It's only $50 live, but and these are I'm only looking at my live trades, by the way. At least I think I am. I could select it as like this instead of 10-year and do it like that. There we go. There you go. Oh, right, because it was counting that one today. So now it actually ends up being 44 instead of 50. 54 or whatever it was. 52. I want a 75% win rate. Not reading. Oh, well, I do kind of wonder if like just avoiding that whole week really actually helped me a lot, because sometimes the really weird stuff happens, right? And it has been like, there has been a lot of like, I'll take the risk in like crazy situations and then it doesn't work out, and those ends up being some of the bigger losers, you know? But I think, so let me try and show you here. Like if we go to the begin, let's just say this year. Let's just say this year. Apply. There we go, yeah. So this year around March, yep, it was March 22nd, I had like a really bad day. And I don't remember what I did that like caused that to happen. Oh, and by the way, just note that I wasn't able to figure out how to get the commissions programmed in here correctly, so it's only showing the commissions correctly since like May. But you can kind of see here where like I was down pretty big and I've dug myself out of a pretty good hole. And if you go further back than that to the beginning of this account, so I think I can go back to I think I included too big of a section. Yeah. Okay. When I first started it, I had a lot of success, and so net overall, not factoring in commissions, I've made 260 overall in the account. It's not bad. Oh, in fact, oh yeah, no, I've never taken that one, but there you go. Yeah, in the micros, in the micro 10-year at least. So that's pretty good. I do need to, well, I shouldn't be having those kinds of drawdowns, right? I can't be too proud of it with a drawdown like that. Yeah, my time is up. I gotta go. I will see you guys tomorrow. Stay excellent, team.